It was my first really, really big trade. I had plenty of six-figure years, but I never had a quarter that, I haven't had a quarter that big since 2004, and I hadn't had a day that big since then either. I called my wife downstairs, and I never looking like P&L, never looking like P&L. I called my wife downstairs when I flattened up. I flattened up my shorts at the 200-week moving average in the S&P at 2346. I'll never forget that. I called her down and I showed him, and we both cried.
Hello everyone and welcome back to the latest episode of Conversations with Leaders. Today we are joined by Pax Kenah, who has been involved in the world of trading for over 35 years. From the pit floor to trading for over 26 years as an independent futures trader, he has seen and lived it all. A perfect guest for our audience here at etoro, who I am sure will learn so much. Links for Matt and the Pax Group will be in the bio for everyone to check out, so make sure you do that. But first of all, Matt, how are you?
Great, Sam. Thank you for having me.
Well, it's great to have you on. Just for us to get going, could you share the story of how you initially entered the world of trading on the CME? What motivated you to go for that career? And how did it sort of unfold from being a runner to being a top-paid arbitration clerk?
Well, I started as I was driving a truck for my uncle on the south side of Chicago. My father found out that I was doing that, not going to school, not going to classes. So my father told me that I better figure something out. That driving a truck wasn't enough. But I tried making the point that, listen, Dad, if I drive the truck, I'll own the trucking company. If I bartend, I'll own the bar. So, well, good. Then go find something else to do besides that. So there was a guy in my neighborhood, Pat Geronda, who had gone down to the SIBO, Chicago Board of Options, and had made millions of dollars by the time he was 25 years old. You know, and the high school I went to on the south side of Chicago, he was donating a ton of money to. And I thought, whatever it is that he's doing, I want to do. So I got a job as a runner at the Chicago Mercantile Exchange, 1988, right after the crash of October of 87. So it was January of 88. I started making minimum wage, you know, and it was like $89 a week is what I got paid after taxes. But I didn't take that job to earn minimum wage. I took that job because I wanted to do that. One thing I knew, I didn't know anybody when I walked on the floor, Sam. I didn't know anybody there, but everybody talks about the sense of, you know, the feeling, the spirit on the floor that, you know, you can sense, you can feel the energy. You know, the energy on the floor was something palatable, and I wanted to know whatever it is that was going on down there. I wanted to be a part of. So I didn't have a rich uncle or a rich father, or I didn't have any clout, so I had to earn my way in. And I quickly realized what the ropes that you have to do to be able to climb the ladder. You know, what do you need to do, and you know, what ropes do I need to learn? So I learned how to do I learned how to hold a deck. I learned how to do hand signals and service customers and clients from all over the world in the front month Eurodollar pit, which was at that time the biggest futures market ever. And with 3.5 years off for the seminary, and between that, I decided to be a Catholic priest, which wasn't my thing. And obviously 5 kids later, it wasn't my thing. I had gone back, and the guy that I had worked for had backed me to trade, you know, so I had worked really hard to build a reputation of character and honor and, you know, a hard worker. So when I came back from seminary, the guy that I worked for was willing to hire me back right away. And at the same time, he was willing to take a little bit of a gamble on me to put me into the pit. So he said, you know, we struck a deal. He said, go trade whatever you want to trade. I want to trade the NASDAQ. It was a brand new pit, something that was up and coming. And whatever time we had left on the floor, there would be something to do in there. So I had chosen the NASDAQ pit, and he's as long as I came up with my own trading capital, he wasn't going to share it in my profit and loss, which was, you know, that was perfect. The only stipulation was that I couldn't go debit. So I did. I started off a little bit of money into my trading account, and I started to trade NASDAQ. And NASDAQ futures at that time was $100 a tick. So, you know, it was kind of harried. It was kind of scary, you know. A water lot could have very easily have cost me $1,000 very quickly, and it did. But I learned how to trade. One of the best markets in the history of futures markets, at least at that time. We only had 5 or 6 really good years left on the floor before computerized trading had taken over. Life, I think, had gone out. The lights had dimmed on the life in the late 90s or early 2000s. We at the Chicago Mercantile Exchange knew we didn't have that much time left. The NASDAQ was a brand new pit. The open interest grew quick. The volume grew quickly. And as volume grew and I grew, I was at the right place at the right time. My trading size grew. I traded bigger and bigger and bigger very, very quickly. I made a ton of money. I was young when all that had happened. I was in my late 20s, early 30s, and I made it just an incredible amount of money at a very young age. I didn't have the spiritual and emotional foundation in order to continue to build it, but I was at the right place at the right time with the modicum of talent. I was able to take advantage of it.
What was that like, earning that kind of money at that age? Because that wouldn't have been normal, right? So was it looking back, was it all too much? Was it a good time? I imagine you learned a lot from it either way.
Yes, it was a great time. But it was too much. I was married and had 2 little babies, 2 little kids. And I loved, I'm the kind of guy that I love being married. I love my wife. I love, but I was married before. So my first marriage didn't last these years. It was, the highs were very high. The lows were very low. I didn't come from anything, I came from a lot of love and come from a lot of money. So I had really no idea how to deal with it. I bought a lake house in like a second home in Lake Geneva, Wisconsin, which is kind of like people in Lake Geneva like to think that it's the Hamptons of Chicago. When I bought that house, my mother gave me a framed plaque of the biblical quote, "It's easier for a rich man to squeeze through the eye of a needle than it's easier for a camel to squeeze through the eye of a needle than it is for a rich man to enter the kingdom of heaven." What the hell kind of a housewarming present is this? I felt guilty. I already felt guilty enough about the money I was making. I don't need my mother to make me feel like, I'm doomed. Because, so it was difficult to kind of make sense of and to get on the other side of it. It was hard.
Yeah. Let's talk a little bit about early experiences trading the NASDAQ then on the pit. What was that like? Was it a sink or swim kind of atmosphere? What strategies at that time worked quite well for you?
It was definitely a sink or swim really quickly. It was, we were thrown into the deep end of the pool. Okay, that's not necessarily accurate. When I started in the NASDAQ pit as a 1-lot, 2-lot trader, we did 3,000 contracts a day in the pit volume wise. Which was very little, right? There was 20 guys in there trading. So we were all kind of learning at the same time. And then the attention on the tech bubble started.
Yep.
98, we had LTCM, we had the Russian ruble crisis, the long-term capital management, 98, 99, the tech bubble took off. So people were looking for a way to hedge all that, and the NASDAQ futures market was a perfect time for it. So as open interest grew and volume grew, I quickly grew with it. I didn't want to get lost in the shuffle. More and more traders were coming in, and these were really well capitalized, really experienced. This was really well capitalized and very experienced competition. We had guys coming in from all over the world to come trade that pit. So if I didn't want to get lost in the shuffle, I better start trading bigger. And not only do I need to start trading bigger, but I need to carry myself bigger. I need to act bigger. If I want to be a big trader, I've got to act that part. It's like an alpha dog kind of atmosphere. So I did. I rose to the occasion, and I did really, really well. And it was every single day was that sort of gladiator battle that we did. Strategies wise, I traded very similar to the way that I do now. I traded the opening range breakouts. So the opening range was defined in those days as the first 30 seconds. I was on pick committee for a long time, so I would sign off on it. The range of the high and the low of the first 30 seconds of the day. So I'm not using that as data. I'm just using that as my daily pivot. And then I would have, because in the pit, we didn't have access to charts, right? I had to, I had to have predetermined targets of where I was going to trade at. So when we started the rally out of the opening range, I'd look to get long. I didn't fade those, I would get long in them.
Yeah.
and I'd have predetermined targets where I was going to take profit at, and where I would add at. Not to mention the fact that there was, market profile was still very much and very important at that time, because human beings created the volume. That was the main difference, was that human beings created the volume that went on. Side-by-side trading hadn't taken over yet, and algorithmic trading hadn't taken over yet. So it was an incredibly exciting time. To have had another 10 years of that, 20 years of that would have been unbelievable. Nobody would know my name. It would have been unbelievable. But that's not the way that God intended it. I'm 55 years old. I'm healthier than what I was when I was 30. I'm more grounded. I'm happier. I'm wealthier. I'm not as rich. That's part of my story. But when I'm wealthy, there's a big difference. I've got 5 beautiful kids and a beautiful wife, and a wonderful life. And it's because of my time, the difficult stages of my life, and difficult stages from the time that I made all that money in the beginning part of my career, my divorce and resetting after that. And then the 08 and 09 crisis, where, that took away a great deal of my wealth and, or my riches, right? Because I differentiate between the two. And then MF Global failed in 2011. And, my mother died, my sister died, and my mother-in-law died all in the same 6 months in 08. When that happened and the world was falling apart, my prop group failed, the business that I had invested tons of money in, all kinds of things were just falling apart, but I was still financially viable. I was still okay. I went into the hog pit, started to rebuild my career after that, But anyway, in 2011, MF Global failed, and all that stuff came crashing in on me, and then I blew myself up. I was chasing that $2 million from MF Global, and, I didn't know if it was coming back, if it wasn't, I wasn't I wasn't taking counsel, from older, more experienced people that had experienced things like this, because I knew better. I was Pax. Look at me. Look at my cars. Look at my home. Look at how great I am. None of it mattered. I pissed it away anyway, and I wasn't listening. So I had to lose all of that and start to rebuild small again, one trade at a time. I had to begin to rebuild my life physically and emotionally and spiritually in order for me to rebuild financially.
Yeah, well, I mean, life is a journey, isn't it? And I guess, it's always easy to look back at things with hindsight, but with trading, it's changed so much over the years, and you've witnessed all of that. With that hindsight, what do you think you struggled with most with that change from the way it's now gone, fully electric and so on? What was the hardest part of that, do you think?
The hardest part for me, trading wise, the hardest part for me trading wise was knowing when to knowing when to increase my size, decrease my size, and when not to trade. That was the most difficult part. The floor was much easier because you can hear the roar of the crowd. I also knew what those 5 guys, what positions they were, what position they were. The 5 people behind me, I knew what their positions were. I made it my business to know my business. I knew how the funds were positioned. I knew what funds were involved in the NASDAQ. I know what side they were positioned. I knew who was more likely to add at certain targets and who were going to puke at certain targets, both the other traders. So I made it my business to know those things, and I acted and reacted accordingly. Now, when I was learning how to trade bigger size, if there were 5 lots coming into the pit, I trade 5 lots. If there were 50 lots and 100 lots coming into the pit, well, I can trade 50 lots and 100 lots. It was quite simple to be able to make that determination. On the screens, it was very difficult to know when not to trade. I tweet a lot about that, or I post on X a lot about that. I did that this morning. I'm not trading today. I don't want to spend any money in a market that's not going to go anywhere, so I'm not going to do anything. That was the major, major component to me. To me, long-term successful career or long-term profitable career is less about what my win-loss ratio is. I don't pay any attention to those stats. A long-term profitable career has much more to do with increasing my size, decreasing my size, and deciding not to trade.
Yeah, absolutely. As I mentioned at the beginning, the links for Matt and Pax Group are in the bio, and I really would recommend following Matt on X. Great follow. how rowdy did the pit get at
No,
times? Was it ever bargy? Was it ever a bit much, or did you actually love that?
I loved it. It was we had when I was a clerk, our feet we were back to belly. We were packed
Yeah.
in so tightly that sometimes our feet would be off the ground. We'd be clerking and servicing our customers and quoting markets, and we'd be so tightly packed in there that our feet would be off the ground when we were clerking.
Wow.
As traders, we had more space. We stood. I had my own space, so I stood shoulder to shoulder with the people around me. But when I'm buying, when I just bought a bunch, I'd have all of the smaller traders in front of me, and they'd all be fighting because they knew that I'd dole out some small stuff. If a broker in front of me was selling 500, and I took 100 of them, he had 400 more to do, and everybody in the pit would come rushing over there.
Yeah.
So there'd be a lot of fighting and a lot of pushing and jockeying for position. There was always fights. There was always fights.
Mhm.
If it was half offer and I turned the market half bid, and I still had my hands up, half bid. I only bought 50. I'm half bid. Nobody was supposed to have traded half until I was satisfied. But I'd see guys in the corner writing, not saying a word, just knowing that if I bought those halves, that I'd be likely to bid 60. So, screw it. They're going to try to scalp me for 10 points on a 5 lot. It's $5,000, 10 points on a 10 lot is $10,000. So they knew that they could scalp that off my own markets. So if I saw that, I'd yell at them and they'd yell back at me and they'd have to defend themselves. And, and now I'm going to go on the attack, and, we can wind up in a floor fight. Fight different than regular fights, because regular fights, you can actually get hit. Floor fights, everybody's going to break it up. But you're going to throw people out of the way and you go ripping over to them and stuff. I saw a guy beat himself up once.
What, the trade didn't go too well, or?
He had gotten in so many fights, and he was in that movie.
He had no one left to fight.
Yeah, if he would have gotten written up one more time, he'd have been fined a ton of money and suspended for 6 months or a year. So he goes up. He wants to go tearing across the pit at a guy across me. He stood 2 people down to my left. We were just talking about how, listen, Mike, you can't you can't go fight anybody. So now he goes tearing across the pit. We all jumped on him. Come on, you're going to get thrown out of here for a year. Stop, slow down. So okay. You can see the smoke like a bull coming out of his nostrils. All right, I'm done. We all go back to our spots and resume trading, and he just stands there. He's just standing there. Now you can see the smoke coming out of his ears too. It just keeps rising. He's Irish American, so that anger just keeps going up in front of him until he just starts to pummel himself. Full on, and he went on for. We were all in shock, so we're all sitting there like, holy smokes. I've never seen anything like it. He ended up getting fined anyway for fighting himself. He came in the next day, his face was all busted up like he had just gotten destroyed. It was unbelievable. I'd never seen anybody do anything like that before in my life. So it was fun. It was fun.
Just quickly, do you miss it, or are you happy that's all done now?
Oh, I miss it.
Yeah.
And I wouldn't go back to it. I'm happy.
I get you.
I mean, those were great days. It was. I would have loved to have had it continue. I would have loved to have brought my kids on the floor and to be able to hand them my business, or to be able to whatever, to have something to pass down. But I don't even know how to say it. I prefer screen trading. After it took me a long time to be able to say that, Sam, but I prefer screen trading. Well, I'm done. It's like my brothers think I'm retired. I've got a younger brother that's a Chicago policeman. He makes fun of me. What do I play? We belong to a club out here. I play golf all the time.
Yeah.
I lift weights and work out a lot. So I'm done by after Europe's closed. I'm out. Yeah, it's 10:30 in the morning our time. I'm done. That's the end of my day.
Amazing. Any similarities, do you think, between golf, you just mentioned that, and trading?
Great deal. A great deal. I didn't start to play golf seriously until COVID. And so
Right.
where are we going? So we joined a country club. Um, I started by taking lessons like everybody else, and I
Yep.
hit a million balls and just would go and keep it. And I couldn't, for the life of me, I couldn't feel my swing, like I couldn't, I knew what a good swing looks like. I watched
Yeah.
it. I watched video. I took lesson after lesson, and I was doing everything right, technically. But I'm dribbling my tee shots 150 yards, worm
Yeah.
burners. So I'm hitting my irons low and another 100 yards straight. But, one day, I just figured out how to take the club head back and stop a little bit, pause, and then bring it through. Now, all of a sudden, my hands are more relaxed.
Yeah.
My forearms, my elbows, my shoulders going into my body, everything is more relaxed. Even my grounding, is more relaxed. So from my feet all the way up to my body is just nice and flexible and relaxed and ready to go. If I'm trading in a stressful arena, and if I'm not breathing, if I'm not slowing my heart rate down, if I'm not slowing my mind down, and I'm trading like I would grip that club tightly and my muscles all tight, and and I know what my swing thoughts are, I know what I need to do, I know what my job is, but I can't seem to get it done because I'm just not relaxed. It's the same thing with trading. I talk about being confident, carefree, fearless, and focused on X, CCFF. If I'm not those things, then I have to cut my size or not trade. If I'm not on top of my game, if I don't feel strong, if I don't feel well, I have to cut my size or not trade. If last Thursday was a good example, I didn't feel well last week.
Yeah.
On Wednesday night, I got a ton of sleep. I felt really good. Thursday came in and the market didn't do anything. We ended up closing just above the opening range, or just in the opening range, but we had a 30 handle break. There was a PCE day. This is last Thursday.
Yeah, correct. Yeah.
The opening range was 51 even half to 51.97 half. So I took a short long, scratched out of those, and then we got short underneath. I got short underneath the opening range, and I doubled my size. I saw it quickly. I knew that the market was going to try to break. I looked for 15 handle. The market did exactly what my plan called for it to do. And I happened to get a lot of sleep. So I did it with bigger size than normal. I ended up having a really, really good day. So far, it's the best day of the month, but it was a really, really, really good day. And we didn't do anything. It was just a wiggle down, but I caught it for 30 points and I called it with good size because I slept, because I was relaxed, because I wasn't worried about anything. I wasn't putting myself under pressure to perform or to impress anybody or to try to do this or do that. I wasn't gripping the club too tightly. I was nice and relaxed. I knew what my job was. It was my job to breathe and to relax and to execute my plan. And that's what I did.
Yeah. Fantastic. I think that's very, very underrated advice that people don't talk about enough. You've got to be in the right state to trade. Over your career, and I've seen, in interviews you've done, I've seen on X, you've been quite vocal about losses, both in your career and personal life, investments, so on. From a trading perspective, and I guess you can lead it whichever way you want, how important is it to be able to deal with losses?
In what sense? A bunch of things came to mind when.
So say, knowing how to lose, dealing with a loss, not chasing the market back, that kind of thing.
Yeah. It's imperative. It's absolutely imperative. So just even within my own life or my own career, dealing with setbacks and how, God, this is such a multifaceted conversation, and how I deal with them has always determined what direction I'm going to go in my life. Yogi Berra has a line: if there's a fork in the road, take it. Right. So, I would look at loss that way. And when my marriage was deteriorating back 45 years ago, my first marriage I started to define myself on my P&L. So my losses became magnified. If I made money, I'm good. If I lost money, I'm a big asshole, that kind of thing. And so that made my losses more important than what they really were. And so what that did was then perpetuate them in my life. I began to just spin my wheels or to chop myself up. But as I got my sense of reality back, I know that those days are going to end through a series of things, from making money, losing money, all of that. Losing family members, our business completely changing. I mean, we went from us controlling the volume in the pit to computers controlling the volume and us just surfing it, and me trying to figure out how to make money in that second phase of my career. So at that point, I had to change the wording of things, right? I'm remarried. I've got 3 little kids. I'm very happy in life. But I've got a lot less money to be able to throw around to be able to withstand the losses. So how can I say this the right way? I had to change the wording of things. I don't lose money. I spend money. I don't risk money. I have expenses. Like this morning, I posted about market expenses versus market loss. I don't lose money because I'm not a loser. And, I don't lose money because then I want to chase it. It's a game. I don't win money either. It's a business. I make money or I spend money. So I changed the wording of that so that I can kind of deal with it a little bit more. Now, also being wrong, like my wife would tell you, or anybody in my trading group would tell you, I'm wrong quite often. And my trading will tell you. But what I do is in relationships or in trading is I pivot quickly. I'm able to look at the situation and realize I shouldn't have said that. I should not have done that. What am I doing here? Why am I doing this? What feelings are coming up that I'm acting this way? And I do the very same thing in my trading. Okay. I took a series of trades here I really shouldn't take. Am I chasing money? Am I chasing loss? Am I chasing missed opportunity? Do I have FOMO? What's going on here? Ground myself like in a good golf swing. Ground myself where are my feet, represent myself to where I'm at in the moment, in the present. Breathe, remind myself that I'm okay, and look at what the next opportunity is. Focus on the next trade. Only trade that matters to me, Sam, is the next one. What I did the last time, before that and after that and after that, or before that, has absolutely no bearing on my life anymore. It's in the past. It's lost. It's gone. It's literally in the past. So I need to focus on the next trade and stay focused on the next trade. I don't know if that's where you wanted me to go with it, but
No, I love it. I think that's an amazing answer, and I can just picture myself, listening to this as if I was, a few years earlier in my career, thinking that is exactly what I would want to hear. And I think it's really solid advice. The next question I think will help a lot of people that are listening to this, and it's around balance. That you're a father, you're a husband, you do the coaching, you trade full time. Balance. How do you find it? How do you go about it? How important is it?
It's imperative. So I think I think for the majority of my life, I've exhibited that I'm a lazy person. I don't think that I'm not the kind of guy that's going to wake up and go, all right, I have to, I make a schedule and I live by that schedule. So I wake up every morning at 4:45. My body's used to it now. I don't need an alarm clock. Every morning at 4:45, my wife wakes up with me sometimes. And if she does, I'll make the bed. If she's still in it, then I'll make my end of it, tidy it up.
Yeah.
And that's important to me that I do that. And then I have a whole morning routine that involves breathing exercises and stretching or light yoga. Sometimes a little bit of exercise and prayer. I pray in the morning. I meditate in the morning. I pray in the morning. And then I come down and I check the markets, and that's going to be, that's going to take me from 4:45 to roughly 6 a.m.
Yeah.
I check the markets. I check the news. I readjust my plan. I'm listening to music now. When I come down, I turn my playlist on Spotify on, and I turn it up, and I sing like an idiot. I dance around it, and all that just kind of gets my body going, gets my adrenaline pumping, gets the endorphins rolling, gets the chemical reactions to the good feelings of life going, so that when the market opens, I'm not going to experience that for the first time. I've already experienced that all morning long. So that, and the last thing I do, and then I adjust my plan. I get my plan out to everybody, depending on whatever the market did after the bonds open, gold open, so or whatever numbers we have out in the morning. And the very last thing I do is I take a shower. I wait until the last thing in the morning to do that. And I'm continually listening to music loudly. If anybody's sleeping in the house, which by that time, nobody in my house is a late sleeper because of how loud I am. But if anybody's home and, everybody's up moving on, because I listen to music so loud, so I take a shower and I'm singing in the shower, and I get dressed and I come down, and the crude opens very soon after that, which I trade crude, and then the S&P opens and trade the S&P open. And then, I'm usually done by 9:30, 10:30. I very rarely will I initiate trades later on in the day unless there's something kind of extraordinary happening in the market.
Yeah, amazing.
At the end of the day, keeping to my schedule to wind down the day, I go over every one of my trades. Why did I take this trade? What did I do?
Nice.
I write notes in my notebook. I write here. I still write a notebook by hand. And
amazing.
It's always wherever I am, it's next to me. I have one next to my bed. So I wake up, you have one of those good thoughts in the middle of the night. You don't want to forget.
Yeah.
So I go over my trades. I go over whatever kind of notes I took during the day. And, usually I'll leave something at, bonds traded 119.08, and I'll go back and I'll measure that out, something that came to me or whatever. And then I take a little bit of a nap. I shut my eyes, I lay down, I relax, and, kind of like a twilight sleep, a little bit of a meditative sleep. And then I go rejoin my family.
Amazing.
I work out midday. So between 11 o'clock Central Time, 12 o'clock Eastern to 2 o'clock, 3 o'clock, I work out. I go lift weights, I go run, I go do something physical.
Yeah, that's amazing. And I think people will really appreciate the importance of routine. It's something we preach here at eToro as well. And we talk about the importance of journaling the trades. Nowadays, everyone does it online, and there's paid apps you can do it on, but it's so good to see someone still writing them down.
Things print in my mind differently, Sam. When I write them down, I think about them differently. The notes that I take during the day, I see them. They're in front of me. I wrote them down. I remember things. I have, people will say that I have like a photographic memory, and maybe I do, maybe I don't.
Mm-hmm.
But I have a great memory because I take the time to write things down. So I think that accounts for a large part of it.
Yeah, I would agree. And it's more serious if you're actually having to write it down and taking time to do that. I think there's an argument in that. Last part then, I've got 4 quick fire questions. And whatever comes to mind, you've got to go with. Favorite trade you've ever done?
Christmas Eve 2018.
Okay. Nice. Reason why?
It was my first. It was my first like all day trade. It was my first really, really big trade. I had gradually from 2013 on, I rebuilding, right? I had plenty of 6-figure years, but I never had a quarter that. I haven't had a quarter that big since 2004, and I hadn't had a date that big since then either. I called my wife downstairs, and I never look at my P&L. Never look at my P&L. I called my wife downstairs when I flattened up. I flattened up my shorts at the 200-week moving average in the S&P at 2346. I'll never forget that. I called her down and I showed her my P&L. We both cried.
Amazing. On the flip side, worst trade or just the one you hated the most? Is there one? And that might not even be a loser, I guess, as well.
Let me go back real quick. My other favorite trade is when I lost $1.5 million in 2001 on the first trading day of the year of my own money. And the reason that was one of my best trades is my favorite trade. The reason that's my favorite trade is because I learned I lost $1.5 million in 30 seconds in the biggest rally in NASDAQ history. The NASDAQ has still not equaled this. We rallied 26% in 3 minutes. Greenspan cut interest rates by 50 basis points on the very, very first trading day of the year in 2001. And I was the only schmuck short. I was short 28 contracts. We rallied like crazy. We rallied 650 full points, and I got out on the high. That was my favorite trade. Next day, I was debit $650,000, and my firm wasn't going to let me trade, but I owned part of it. And we talked to the guys in New York, and they let me go. Debit $600,000 as long as I didn't lose money. So I went on the floor, and people were talking about me being down 10 million, 20 million, 5 million. For every outlying event like that on the floor, there was always, some bad horror story. I was the horror story in it. They always made it out to be 10 times worse than what it was. But I showed up the next day and I traded. I made $150,000 the next 2 days. So when I when I moved money to clean up my debit, it was half of what it needed to be. One of the compliance guys asked me the next day. One of the compliance guys was in the pit, and he like pointed at me and said, "You okay?" My eyes welled up. Yeah, dude, I'm okay. Holy shit, I just lost $1.5 million, and I'm all right.
I'm okay.
Yeah. That's the day that I knew I was a trader.
Love that answer.
Not when I made all that money, because I started with nothing. Not when I made that money, but when I lost $1.5 million and I was at work the next day and I traded beautifully. Yeah. Incidentally, 2001 was the best trading year that I'd ever had. I still haven't equaled it. I started off the year down $1.5 million, and it was an incredibly big year.
Wow, I love that. And then worst trade then, like not maybe from a monetary point of view. Is there one that you just you're just I shouldn't have done that, or I should have let that run further, or something like that?
Yes, the worst trade that I ever had that's kind of a stupid story, but also on the floor.
Yep.
I had heard, I never did stuff like this, but I had heard one of the clerks say, other side of the pit, he's got 100 to buy on the open. Remember, I traded the opening range stand like I do now. Yeah. So the broker next to me offers 100 at even. He's got 100 to buy. That's buy him. So I bought 100. I didn't wait for the breakout. I bought him right away. The next trade was the lower 90, the lower 80. I just bought 100. That's 100,000, 200,000. The lower 70, 300,000. Holy shit. He didn't have 100 to buy. He had 100 to sell. They're selling the shit out of him, and I'm the only asshole long. Well, I ran out of the pit. There was no outs. I mean, I'm down 300,000 like in a minute and a half. So I ran out of the pit and I bought S&P to spread. I sold S&P to spread against them, and both sides were losers. It took me a month to trade out of that debacle. Wow. Now, that's my worst trade, not because of what I lost. It was my worst trade for two reasons. Is I reacted to something I thought I heard and not something I knew. And I didn't leave myself an out. I didn't leave myself a definable exit on that trade. I wung it, and I don't wing it. I didn't wing it then, and I don't wing it now. Every trade that I take has a definable end. I know where I'm going to get out before I take the trade. And that is the one trade that I took in my career with big size that when I got in, I didn't know where I was going to get out. I just did it. I've never did it. I've never done anything like that since.
Yeah, another incredible piece of advice, I have to say. Okay, last two quick fires. Last time the market shocked you?
COVID. Yeah, the rally in COVID.
What, from the March low, or?
We made the low 2174, 2179 during the day, 2174 when I and then we just went. Exploded. The yearly upside target that I had for that year at the beginning of the year was 36.52. When we were trading at 21.80, there was nobody in the world thought we'd ever see that. We saw that price in November. We made the low in March, and by November we had rallied up to 36.52. That was shocking to me. This rally is also shocking to me, but not as shocking as
not
that.
On the same level. Yeah. Okay, this is probably a tough question to finish on, and both I'd imagine you say are probably equally important. But is it, in your mind, more important to make your winners count or cut your losses?
Oh, I think this is going to be an unpopular answer, but I think in the long run, it's more profit management is more important in the long run. Yeah, short term, I'm not going to get there without good risk management. So cutting my losses, is important, but it's not going to get me to where I need to go. I'm going to have to learn how to manage my profit a lot better than that. So I would say in the long run, I forget how you put it, but letting my winners go,
really making them count.
Making those count. Yes. I think that's more.
But obviously, massively important. Matt, it's been an absolute pleasure to have you on. I've learned a lot, and I'm sure our audience will have as well. So, Matt, thank you so much.
Thank you, Sam. I appreciate you having me on. I really do.
Thank you very much.
Thank you, brother.